are destructive.
That's good.
So he was denied the casualty because the reason for the casualty is because the squirrels ate holes in his roof.
Damn.
And
Just
that
that
was an
makes any
actual
sense to me.
You know, I had a hard time with that one too. She explained that to me about 3 times, and I went, "Really? No way!"
It just doesn't make sense.
Acts of God.
Acts of God, though, is a casualty loss, right?
Now see, it's got to be sudden, unexpected, and and when you get act of God, I mean, like wind, rain, those are all acts of God,
Flood.
tornadoes, and those are deductible. But this was because the squirrel ate the roof.
Okay. This is my favorite one that you have on here, Bobby. It truly is.
Oh,
Oh my
if you
God.
burn your house down, you cannot deduct it.
And everybody in the room rolled their eyes at that one.
Only Bobby.
Only Bobby. All right.
If you lost something, you can't put a casualty in it. I mean, it's not stolen. It's not destroyed. I mean, you just lost it.
You just lost.
You have no idea where you put it.
You can't deduct the extra socks that you lost in the dryer, which is
Or the Rolex watch.
And
the
just
Rolex
because
watch.
and just because you put it up for safekeeping and now you can't find it, it's not a probable cause.
You know where you'd make a lot of money if you find out where the sock monster takes the socks.
where the sock monster takes the socks. I'm telling you. And then
Just normal deterioration, wear and tear as the years go through. And some people will expect a casualty loss.
I do.
I would.
And I'm sure the insurance, how long have you had that? Oh, 30 years.
Exactly. All right. Are you ready for the next round?
Any questions?
Is my mouse going to go away? There it is.
Okay.
Ready?
Don't we?
Name deductions not subject to the 2% limit.
Just the two medical?
Now this
Medical's
is
got a 10% if you're
Yeah,
over,
but it said 2%.
because there's a 2% miscellaneous expense.
Oh, okay.
It's on your Schedule A, down toward the
I
bottom
know,
one.
but I was thinking anything but the 2%.
she's just thinking the number 2. Okay. Any answers?
No,
Nope.
it gets the 2%.
Daddy. She was supposed to use that for me.
I had it a time or two too.
Number 1 is probably Miss Jackie's favorite pastime, if I'm not mistaken.
Who? What?
My
What?
favorite pastime?
Yeah.
Gardening.
No, I was thinking you scratching.
Lottery?
Gambling.
Oh, I don't gamble.
Oh, I thought you had the scratch.
Oh, no ma'am. Mm-mm.
That's my brother.
I won't even buy a dollar ticket.
I don't either because I never win. So what's
You
the
don't
point?
win.
Mm-mm.
My brother-in-law won $500 this weekend off a scratch off. It's like I hate you.
I know, right?
We had a customer.
My girlfriend called me from Augusta. She does the scratch off. She's a thing. She won $1 million a year and a half ago.
Oh my God.
That wasn't enough for her. She still scratched off. So she does the second chance on the back of the tickets and puts them online, the ticket numbers. She got a call and won $10,000 on a second chance Friday. I'm like, really?
Wow, I didn't know that.
Yeah.
I mean, I just never knew anybody that won on a second chance.
She said she had never won as many as she buys. But
We did have a customer here that won $500,000.
Well,
And we had an employee a couple years ago that won $250,000.
well, we've had you had another. It wasn't here. It was at the mall. There was a client that won a couple million or something. Every time she came in, she brought them receipts where she won
Wow.
thousands, and
I think it
one
has
time
to
it was
do
a
with
million.
luck. I really do.
I don't have any looks.
I don't know.
Okay,
God likes them better, I guess.
that's another one.
I don't scratch off.
Okay. Loss from the scheme.
Ponzi scheme,
Ponzi
or any
scheme.
other kind of.
Mm.
The Ponzi scheme, I guess, is the most popular. That's the most talked about. It is.
Sort of Ponzi scheme.
That's what I was thinking.
Do a Ponzi scheme.
Yeah.
Unrecovered investment in annuity.
Hmm.
What about this one, Miss Bobby?
Explain that.
This one right here. Unrecovered investment in annuity.
Like the gambling loss, would that be that you took and you invested it in something?
Like what? Anything? I don't care.
And
The what?
and the bottom
Like the
drops
Dow
out.
drops.
Like the bottom drops out of it. And the money you use comes from your yearly, that you have the money deal. Then you couldn't recover it. I mean, you couldn't.
Okay,
Because it's not money.
okay, what it is when you make investments, and basically, yeah, the investment goes bad. But it's, and you can't recover. It doesn't recover. And I don't really, but this has to do with annuities. I really don't think we've had maybe one or two that's come in, but I just thought it was interesting that, it didn't cover the 2%.
What about the devaluation of your house?
And actually,
Crisis we went through, the house is worth $2, you sell it for $150, you can't take that $50.
The value of your house goes down.
Say you do a short sale on it.
Yeah, well, he's saying your house is worth $250, you sell it for $150 or whatever.
yeah, and if it's a personal home, you can't take a loss on it.
Right.
You can't.
But what if it's a business, a rental?
Well, that's a different story then. That's an investment.
Okay, what about this impairment-related work expenses?
And this is one of the notes that I lost.
Number 10? I got it.
What's the impairment?
Talking about your original notes?
That word's got 3 syllables and that's too much.
It's got 3 syllables and it's too much. That's hilarious. Or those are your notes. 'Cause I've got your originals too.
Impairment related work expenses. What does that mean?
That's what we're trying
That's
to
what
figure
we're
out.
getting. She's pulling that up right now. Please hold for a review of the code. She's looking at the code right now.
I apologize. This is one of the.
Because the one in there was our only other one, and we're not in a position to pay your full bill. So we could trade it down, but we could also send another payment service.
And just for your information, those two came out of the publication 529. It's where I got those two from.
But what is the impairment?
I don't know. Put it in exactly how you wrote it.
Impairment.
And it's because the whole thing wasn't written.
Wait a second.
Impair-related work expenses of people with disabilities.
Say that again.
Impaired-related work expenses of people
Give me an
with
example.
disabilities.
What do we mean by that?
Give me an example.
Chet says, give me an example.
If you have a physical or mental disability that limits you being employed or subsequently limit one or more of your major life activities, such as performing manual tasks, walking, speaking, breathing, learning, and working, you can deduct your impairment related work expenses. The expenses are ordinary and necessary work, business expense for attending care services at your place of work, or other expenses in connection with your place of work that are necessary for you to be able to work. And I'm thinking of Miss Mary.
Mary Fashion. Okay.
She was in the chair, and we had to make sure she had, way in, way out,
Okay. Well, I know we also had another employee who had his diabetes was really bad. His eyes were going, and we bought a magnifying screen. I know, Deborah, I think you were there when we had it. It was in the mall. On the monitor so he could see in his last year of doing taxes because his eyes were going. So I guess that would be the same principle.
The example is you are blind. You must use a reader to do your work. You use the reader both during your regular working hours at your place of work and outside your regular working hours. The reader services are only for your work. You can deduct the expenses for the reader as an impairment-related work expense.
Oh, and the light bulbs go off.
Yep.
That makes sense. He wasn't blind.
Are you off, or is everybody else?
We are still on. Let me quickly make sure we don't have any questions in the webinar.
Did that clear everything up?
Yeah.
Okay. In the chat, if you have any questions on that, please go ahead and ask your questions. We're going to take a 5-minute break. It's 11:14. Take 5 minutes to use the restroom, get some coffee, whatever you need to do. We'll leave the chat line open, so if you have a question online, go ahead and ask those questions, and Bobby will get to them. So we'll take a quick break.
Okay, an uncovered investment in annuity is a retiree who contributes to the cost of the annuity can exclude from income a part of each payment received as a tax-free return of the retiree's investment. If the retiree dies before the entire investment is recovered tax-free, any unrecovered investment can be deducted on the retirement final tax return.
That's true.
Did you hear what I said about the unrecovered investment? It's a retiree who contributes to the cost of the annuity can exclude from income a part of each payment received as a tax-free return of the retiree's investment. If the retiree dies before the entire investment is recovered, tax-free, any unrecovered investment can be deducted on the retiree's final income tax return.
We get that.
Yeah. Well, that's, like I said, I was trying to find oddball stuff, and so
Yeah, well, that's good though. We might find an oddball creature coming.
No, some of it was stuff that can happen. We don't get it enough to really remember what we did with it. Or some stores will get it and other stores don't get it.
I have a question for you. How many eggs do my daughter need to sell to count her chicken farm?
Is she selling? Well, as long as she's selling them. And the way a 1099 or, Schedule C would do anything that you sell, because you got the expensive of the chickens. But if
You said they thought they had a new breeder house built, like a little mansion.
how many is she selling? I mean, is she,
Probably 10, 12 dozen a week.
well, for a year that would come out to quite a bit. Is she starting to sell to businesses or just people? If she stays with just people and it doesn't get any bigger, they might classify it as a hobby. And then it would be, the expenses go up to what your income is. So if she made $5,000, then she could only deduct $5,000 worth of expenses. But there again, it's tips for tat, she doesn't find it. If you know what I mean, she doesn't.
Right.
She's not making a profit.
No, really she's kind of breaking even, if not losing a little. Like with their feeding.
Oh, it is with the egg.
Yeah, Lisa, I know you lost sound at 3:41. I actually muted you guys. And Michelle is rocking it with all these questions. Good job, girl. Okay, everybody, we're back from the break, except for Miss Deborah took a phone call. That's okay. And we're gonna get now. You're gonna clarify something on.
Right. It was I don't know who was in on the discussion about the impairment
Impairment.
Did they understand that? Or is that clear to them?
I think we should go back over that because it's a little, just in
Okay.
case.
The impairment-related work expenses is when you are handicapped, you have a disability, and you need certain things or certain or I should say, mechanical objects to perform your task. If the work expenses have to be ordinary and necessary, and it has to do with you performing manual tasks. The example they used was if you are blind, you must use a reader to do your work. So the reader that you have on your job would be deductible because you have to have that in order to perform your work task or what your job entails of you. And it could be a magnifying glass, I don't know if any of you have seen that. It's a big square glass that goes over your work where you can see. It might be where we put little sensors or maybe a rope where they can walk
Just a
along
second.
and hold the rope. Whatever is needed for them to perform their job for you. Is there any questions on that?
So it's more of a deduction for the employee.
Well, you can deduct it if you had to buy the reader or you had to buy the
Right.
Just
the
a
customer,
moment.
they-
But in
whatever
y'all's
they had
case
to
with that
buy.
magnified screen, you took it.
Or even if
What?
it's,
When you said you had an employee
So
that you had to get a
basically-
magnified screen for,
Yes.
so it's your deduction.
Yes, it was Debbie's deduction. Okay, I have just lost the connection. So,
I didn't mean you personally.
so that would be if you
Yeah,
had
it was
to-
Debbie's.
If you had to have special equipment or special reader or something special.
Jeff,
You
we're
are
picking
they
that line
answering you,
over.
no, we've lost our connection.
Jeff said we're picking the line.
So we don't know if they understood that or not.
I don't think we're on right now. Just the internet is down.
And then unrecovered investment, I don't know, did you hear that, Chet?
I'm
You were
sorry.
outside, okay. A retiree who contributes to the cost of an annuity, you paid it out of your pocket, can exclude from income a part of each payment received as a tax-free return on the retiree's investment. If he dies before he gets the entire investment, any unrecovered, money that hadn't been, investment can be deducted from the retiree's final income tax. And it's not, you don't have to use a 2% limit on it. Because usually 2% of the AGI deducted, But it has to do if you don't get your full amount from the annuity, what's been left, you can subtract from the final. And, when I did the impairment thing,
Why?
my whole thing was Mary, Miss Mary.
For what?
Remember Mary that worked with us?
Yeah.
with the special-
Yeah, she worked with me.
Yeah, with the wheelchair, where there were certain things because, she.
Well, you put Channel Girls Brooks.
We didn't need to pay for anything,
Cigar
but she had
Brooks
special stuff that she
Yeah.
worked with.
Whatever became of her.
She does taxes in her home. She does taxes at home.
Do you
For
remember
a
Miss
few
Mary?
clients, Mary Fashion. She came to Cypress.
Yeah, she was in a
You were there.
wheelchair, and her
She
speech
came
was
by.
very
She's doing
limited,
good.
movement was very limited. And that's what I thought about when I stuck that in. Oh, because we had an employee that needed special stuff.
Okay, our connection has been reestablished.
Oh, really?
And we appear to be muted.
I'm just gonna blame Jessica.
Shut up.
There you go.
Yes. Well, for some reason, they can't hear me right now. I was connecting audio. I'm sorry. Gotta get technical about it. Alright, let's try that again. Hello everybody, we should be back online. Apologize for that. We actually had an internet interruption. So we're going to get back on track. Bobby, is there anything else you wanted to cover before we move forward?
Do they have any questions, or did they understand about the work impairment?
Does everybody understand about the work impairment? If you need to ask a question, go ahead and use the chat feature on your screen. And it doesn't look like... I don't think so. I think we're okay. I don't see any questions. That's 341 going, help, we can't hear you. Ready? Is this round 10? Is that what we were on? We're on round 10. So,
We should be on 11.
name a non-deductible expense that... My question just disappeared. Isn't that super?
Non-deductible
And I kind of
expense,
had
what?
fun with this one.
Volunteer
So, well,
hours.
not volunteer what?
Get paid. If you go volunteer and you take some day off from work and you want to get paid, what you would have got paid if you were working. That makes sense.
What?
I got a box.
I still don't understand the answer, but I
These are
think
non-deductible expenses. Yeah.
some
I
bizarre
understand what you're saying. I
Volunteer
know it's
work.
not one.
non-deductible. Okay, so the question was name that
Non-deductible
one would
expenses.
assume
So
are
people ask you
deductible.
to take off, which we can't take off.
So your client's sitting in front of you, and there's a few things they want to deduct.
Animal expenses.
In-house
Veterinarian fees.
In-house flooding. Oh, I don't see that.
I didn't get that far out.
Over-the-counter
Life
medicine.
insurance.
Do what?
Over-the-counter medicine.
Over-the-counter medicine? Well, that's true.
Life
None of
insurance.
us.
That's a good answer. Good answer. That's with the insurance, though.
That answer got
Life
life
insurance?
insurance.
It's
Oh,
not
yeah.
deductible, but it's
Right.
with the insurance question.
I thought that's what we were doing. That's not deductible.
Not deductible. People are assuming it's deductible.
Life insurance.
Life insurance. That's not on. That is not one of our survey answers.
Well, I know who you
Mom.
surveyed.
Uniform's over $800.
New house is deductible.
No, we're gonna
Washing
go
machine.
washing machine.
Remember that?
Yes, I do remember that. It was a washer, dryer, and the whole shebang for that
Yeah.
much.
College expenses.
Daycare expenses for somebody else's child.
Daycare expenses for someone else's child.
How about
college, but not
daycare expenses for people that don't work? They just want to get rid of their kids and take them to daycare. Just at home.
Yeah, that's not deductible, but that isn't one of them. Like if I pay daycare expenses for my
Like raising somebody
grandchild,
else's
daddy's
kid
pregnant, I can't take that.
per se in your house.
Yeah. Let's have some fun with this. Let's
No,
have
see, and
some
I thought these
fun.
were I thought these were.
Let's have some fun.
Illegal bribe.
Illegal
Ah.
bribe.
Kickbacks, huh?
Dope.
Dope.
Okay,
Let's
now
see.
talking about dough, I thought that this might be interesting.
No, that's taxable.
I say that might be a hobby.
I don't know whether
Hobby
you're gonna get
horse.
asked, is marijuana deductible? No, it's not.
Not even
It's not.
What
And
about-
even if it's legal under state law, when prescribed by a doctor in a state where the taxpayer lives, it's still not deductible.
What about like
Not
same-sex marriage? It's not deductible federal, but it's deductible in the
Deductible?
state.
Deductible.
You get credit.
No, you don't want to say that.
I was like, we're deducting?
No, but you know, like same-sex marriage, you can claim each other. In
No,
the
I don't
state,
know
but you
same-sex
can't
marriage.
do it.
No.
You know what I'm
You
saying?
can do it federal. You
Yeah,
can't
but
do it
the
in
thing
state.
about it is
But you
marijuana
only
is
do it in-
illegal by the federal government. The feds say it's illegal.
Right, but what I'm saying is, can you claim it on the state if the state says it's legal?
Not according to that.
If the state says it's legal, you can do it on, in fact, we had one here that we had to do federal because in their state, they had been claiming that, and they've been claiming that for like 10 years. And then they moved to Georgia and found out that they're not legal, but in their state.
Right, but like Georgia.
Now, why would they move to Georgia? I'm gonna throw
Yeah, we
that out
couldn't
there.
do it in the state of Georgia.
Right.
But
We
okay,
had to do them separate.
they're
But their federal was married.
okay. They're trying to pass a law in Georgia now that it's legal. So if they would pass it, could they not do it in federal but claim it in Georgia? Is what I'm saying. If it was legal.
I don't know how that would be.
If it's
Well,
legal.
there's federal. We've been doing.
You can't do it for federal. I mean, it's
I know
illegal.
you can't.
But I don't know of how you could do it on a Georgia.
If it was legal, could you do it in Georgia? On the Georgia.
Are you talking about same sex? Or
No,
I'm talking
marijuana.
about dope. I'm talking
Oh, about marijuana?
Mary Jane?
No, because as far as that's where I was getting confused. I'm thinking, wait a minute, what are we talking about? No, federal. As far as federal goes, it's an illegal drug. Period. Bottom line.
Right.
Period. But the state, of course, says that you can use it for medical reasons. If a doctor prescribes it,
And it was legal in the state, you could claim it?
Move on.
not federal wise.
No, but I mean
On your
state.
state.
And the thing
return.
about
How
it
about
is usually
gambling
federal
losses
goes
in
over
excess
to
win?
the state.
But same-sex marriage is not. Same-sex
I have a
marriage, if
question
it's
here
legal
and
in
I
that
can't
state,
see it.
they're able to do it.
But you're
now.
talking about apples and oranges.
Well, we
I
talked
mean,
about-
they're two separate things. You're talking about a drug that's illegal in as far as federal's concerned.
Not really though, because if it's okay, then if it's, whatever, if it's illegal federal but legal statewide.
I don't think you'll be able to.
I mean, I don't. think
But we'll
it's-
check,
I don't
I'll
think
tell you
that-
what,
that- I just
on the
think
20th, I go to Dillard, and Mr. Scott Purvis will be there, and he's one of the monkey monks at Georgia State, and I sure will hit him with it.
Because they're trying to
And
pass a
ask
law
them.
in Georgia.
Yeah,
Going
and I
to Dillard,
really don't
Georgia.
think it is.
Illegal.
Yeah, you're going to NATP, aren't you?
Mhm.
Because I heard about that on the news the other day. If it goes through.
Yeah, I don't
it'll be
see,
legal.
because federal's, goes over to state, as far as they take whatever federal, And if federal doesn't accept it, state usually won't accept it either, right?
Right.
So I'm saying no, but I'll find out.
From what I read on Profiler, anyway.
Mm.
Okay, Michelle had a question, but I could not see what the question was, so we'll just move forward.
Are they giving us any answers over there?
No, they're listening in.
Okay, let's do another. Let's unveil another one.
Miss Brown says you folks online need to participate with the group. Just teasing y'all. Okay, where do you want to go next? Which one do you want? Give me a number.
1.
3.
I think I just clicked 1.
We get asked this all the time.
Yeah.
Political contribution.
Political contributions.
But I give. No.
What about all these rich people giving all this money to presidential campaigns? Where does that go?
In the guy's
Give
pocket.
5.
Do 5? I will when I have
They
a
give
mouse.
another name.
Lobbying.
And think of how many people get paid to go to lobbying. They get paid a lot of money just to walk around Washington D.C. and state different cases. But giving them, when you contribute to them or to their cause, it's not deductible. So that kind of goes in with the politics.
Child support.
Child support.
It's not deductible, but it's not one of them.
But it's not one of this.
Because everybody know that. Yep, too easy.
All right.
How about something stupid?
lunch.
Did you say lunch?
Residential phone line.
You get this all the time. Lunch with your coworkers is not deductible. How many people? But we talk business.
Right.
You know, they'd say, you know, well, all of us go out to lunch once a week and we talk business.
Meals, yeah.
While working late.
Well, meals aren't deductible. Anyway,
Remember years,
but we got some people to think they are.
I know some
remember
people think
years
that.
ago, we were able to take certain things that they worked over 16 hours.
Yeah.
Right.
That is not true anymore. So that's why I threw that in.
Driving to and from
We're
work.
talking about like firemen and so forth.
Now, firemen,
Pets. This is coming from Michelle. Things you can't deduct: pets, mortgage from someone else's house, and someone else's mortgage. No, those aren't deductible.
now a good girl.
Good
I'm a mother,
answers.
but Good girl.
You have been approved by the group for your awesome answers. Okay.
Okay, now about policemen, and it was a case where policemen, the question was, they are on duty while they eat their lunch. They have their radios going, their cars right beside them, and they basically have to jump back in the car and take off. As long as they are in uniform, they are on duty, you know, they do have their radio going, which I'm not sure how you're going to make them verify all of this. Yes, their lunch would be deductible.
Well,
But not every single one.
All their lunch is gonna be deductible because they all sit around.
What do you mean,
in the
not every
restaurant?
single one?
Not, I mean, you know, they're not going to get lunch every day. Only when they're on duty.
Well, that's what I mean. If they're on duty,
And they got their radio going,
Yeah.
they're sitting beside their car so they can hop back in their car, you know. Now, that was in, a quick
I
one.
don't say this is gonna get paid.
The quick finder.
is that if they have to get back in or
Yeah,
if they
a lot
do
of times-
get back in?
A lot of times they have to leave their lunch. They just,
Yeah.
you know, I mean,
So it's only if they
But-
leave their lunch.
But, there again, they had to have paid for it. Because how many, there's a lot of restaurants here in this town. They all get free lunches, so what are we deducting if they got a free lunch?
They get free lunches around here now? And
Oh,
they
yeah,
used
a
to
lot
get
of
discounts.
A lot of them will give them free
Really?
food. Yeah, free coffee, free food and stuff. So, there again, did they pay for their lunch? Now, on firemen, because they're on the 24/48 thing, if there is a kitty and you have to put money in that kitty, say I went to you and said, okay, I need $20 from every single person every week in the kitty to buy food and drinks and stuff for here, then it's deductible. But if you volunteer, if they just said, here's a kitty for the drinks, if you want to volunteer to put money in it, you can, you don't have to, there's the drinks. So if you volunteer, no, it's not deductible. But if you're required,
Now,
no.
they have to keep a record of that. So we only deduct them in the amount they put.
Yeah, but if the firehouse says everybody's got to put $20 in that kitty every week, then it's deductible.
But do they have to keep a record of it? Whether it's on a paper, on whole paper, or whatever.
Yeah, I mean, you know, I would say, I mean,
Probably on the kids that should be.
I don't think so, because now it might be, but I doubt it. But anyway, and a lot of firehouses do that because they would get people that would buy stuff and people that don't buy stuff. But we'd eat the stuff that the people bought. So a lot of them were going, and like I said, they're there for 24 and then somebody else is there. So a lot of firehouses do the mandatory.
And this always comes up every update seminar we do in December. This comes up every single time.
And that is in the quick finder.
That's in the quick finder.
I
Yeah.
sent you a copy of it a few times.
Yeah. So this always
What-
comes up
what
in
is it under?
conversation.
In quick time.
Meals.
Under meals.
Okay.
Okay.
Okay, liaisons, what's number 8?
I would love to if they'd cooperate.
This is something else we get asked about all the time.
Cemetery plots.
God, no.
God no.
Huh?
Welcome to the country, folks.
Yeah. Land, you know? No.
No. Okay. Ready?
Okay, 12.
All right. Name taxes paid during the year that are deductible.
Mortgage,
Land.
Property taxes.
Okay.
And you have real estate,
ad
property.
quarterly
What's-
federal taxes.
federal taxes aren't deductible.
State taxes are though.
State taxes are,
Well,
yeah,
taxes.
state and local income tax. What goes along with that, Chet?
Well, if you get a refund, you get taxed on it.
No, I mean, you can deduct income taxes that are on your W-2s, but what else did we deduct? Or you can deduct what?
From losing
Oh,
you.
Think about big.
Spit it out, spit it out.
Think about big purchases.
Big purchase.
Sales tax.
Sales tax.
There you go.
Okay, you gotta do one or the other.
And this one, this next one, you had to deal with.
Well, that's a lot of help.
Foreign income tax.
Oh, yeah.
Foreign taxes paid.
And the only
Gotta
time we really
search
see
for it,
that is
too.
on dividends. Have you noticed that we see, and it's usually what, just a couple of dollars? And it makes for fun because then you try to get out of it. It says you didn't do it for, you know.
I guess we have a lot of ones that went to Iraq, civilians. We had about 5 or 6 that had foreign income, almost like 200,000.
Right.
I
What,
have a
Miss
Canadian
Deborah?
that worked in Canada, and weird thing, you have to file Canada and you have to file the United States.
Right.
But the United States I got to take off, or, you know, he got a credit for the Canadian taxes he paid.
What's that thing you had doing last year? I was trying to help you with it. Remember he worked somewhere with.
Well, and then to bring it, because I know that the folks online didn't hear that, Miss Deborah brought up the fact that you guys had several contractors, weren't they, that went to Iraq and came into the mall. And then Miss Deborah and Linda were saying they had one as well. It's very common where they made money overseas. We ready?
Ready.
Ready. Let's silence that because it's getting annoying, isn't it?
They got some rules.
Name the persons a taxpayer can deduct medical expenses for.
Children.
Now I added one on you on this one.
Self.
Children, parents.
Added self.
Dependents.
Dependents. So what kind of dependent? Like you said children, child, so qualifying child, relative.
Parents.
Oh, it's
Okay, the rest of this is
Adopted child.
adopted child. Yeah, but the rest of this is those wonderful cases with the divorced parents.
Yeah.
Yeah. A non-dependent
Oh, that's
child.
easy.
What did you say?
Non-dependent child.
So they have joint custody. Okay. An adopted child. Or if they're completely separated and somebody else can claim that child, they pay more than one half of that child's support. But do you pay the medical?
And we're starting to get, I don't know if y'all are, but in here we'd be like, well, I pay, you know, it's like,
Foster child.
who pays what? Medical wise, if you're divorced. And especially if like I pay, or I guess the husband or whoever pays the medical insurance and I pay who overpays. But the other person, we claim what she pays in medical also.
Oh, go
What, she
ahead.
pays?
Yeah, in a case of divorce, both of them.
Hush, song.
For the
Yeah, that's what I thought.
Them have some
Now,
answers.
if that child never
We'll
lived with
find
me,
it.
I mean, you know, if I have nothing to do with that
Parent,
child, of course,
yes,
no.
if you're paying
I
medical
understand
for your
that.
parent, or you're,
We're talking
you know,
about,
you're claiming
joint
them.
Custody or,
That makes sense, but unfortunately, not one of our answers here on our
what
survey.
was that?
Michelle's answer, parent.
Yeah,
So,
that's relative.
Yeah.
relative, so qualifying relative. I'm gonna get rid of the screen.
In
Oh,
that case, well,
We live in your.
okay, these two are the two different ones.
Yeah.
Ones we don't really
Now,
see.
this one is gonna surprise you.
It would if it could.
Okay, you cannot claim them because they're not in school and they make over $3,900. But they live with you. Say they're like, because they're not in school when they're 19.
Okay.
They're no longer in school, so you cannot, cannot put that. They make $5,000 a year. Well, that's kind of obvious that they don't support themselves, isn't it? So, but you can't claim them because they made over $3,900. But they're in your house and you're supporting them, so you can take them.
Okay.
And this is where you have two 18-year-old, 19-year-olds that are married. They file jointly to get whatever tax they paid in out back. But they're still underage and they're still living in your house. And you're still totally, So these are starting,
Right.
these used to be, we never heard about these things. And I don't know about them all, but we're starting to hear about this.
I think Cypress has been dealing with this for a long time.
And that brings up another thing too about, talking about that, is I was asked a question about this. Children can be on your insurance up until 27 years old, okay? The ruling on that is if you have to pay more money for the insurance to put them on it, it is not deductible. Additional premiums for non-dependent children under 27 generally are not deductible. It's not an issue if it doesn't change your insurance premium.
So if it changes it, you have to subtract the difference, and you.
No, you just can't deduct the
can't use.
extra.
That's what I'm saying. You have to take the difference.
Can
away.
you clarify that? Because say that
doesn't
again.
make sense.
Under 27?
We're talking about, the insurance company are now saying that you can claim you can put your children on your insurance, medical insurance
Right.
until they're 27 years old. Okay. The IRS ruling on that was that additional premiums for non-dependent children under age 27 generally are not deductible. If it does not change the insurance premium, like you can add them to your medical and it's not going to cost you anymore, then you can, it's not an issue. You can take their medical. But, because I was asked that this year,
That seems a little.
well, I mean, he's on my insurance, he's
Well,
27, so but I didn't know whether to ask, and at that time, I didn't know whether to ask, did you have to pay extra for him to be on the
Okay.
insurance?
What I mean is, say you're paying
I don't understand the
$200 a
reasoning
month
behind
insurance, but then you decide to put your child on there, and he's an extra $50. So would you take this still would be 500 or 200 and not the 250? You take the 50 away and claim just the original 200.
Well, you would claim the original, but you could not claim
Right.
his medical either.
Wow. Another moment of minds blown right here. Anyway.
But now this would not, if it was a disabilities children or
Right.
child.
Disabled children.
Just to make that clear. Okay.
Ready? Are you ready?
I'm ready.
Substitute Steve Harvey. Name the items at the closing of a home that add to its cost basis. I believe was the original question.
We got a handout one time a couple of years ago on HUD 1, what is and what's not.
Mhm.
I wish we'd have that again in the cheat book.
In the cheat book. Do you
Yeah,
still,
you
do you
need
still have
another
it?
handout like that?
Yeah,
Yeah.
I don't know.
I still got mine, but I think everybody ought to have it.
Oh, I agree.
Okay, y'all have to
Okay.
share that with me because I don't
For your
remember. that.
attorneys?
This is closing costs that add to the basis, not a deduction.
What did you say?
You gonna see about that, Molly?
Mhm.
On that HUD 1, you gonna see about it?
Closing costs?
Oh,
you say-
are you talking about that page?
Yeah,
Yeah,
Points?
2 pages, actually.
2 pages, yeah, I'll find it. But I got it somewhere too, I'll find it and read it. Okay. The legal fees are not a deduction,
But it adds.
but they can be added to the basis.
What about the appraisal fees?
Would that be 4? Bobby?
Yeah, I guess.
Kind of along those same lines? So 4 would be kind of along those same lines?
Yeah, it's on the same line, but
It's not the same thing, but it's kind of along the
It's not,
same
yeah.
lines.
the other one probably would be. These are ones that cannot be deducted. The asset fees, I think, can be.
Costs of renewal.
Possibly, yeah.
What about when they have to certify through the pest control company?
8. Pest control stuff.
You know, like when I bought my house, I had to get a certificate saying that I did not have termites. And
Okay.
That is one of them, but it's not.
Yeah, but
We do improvements to it, you know, how something is not like you like it, if you do improvements to it, it adds to the value of the home.
Right, but these are closing costs on your
Closing.
settlement statement.
so, me, you're talking about pest control. What if you put in utilities? So,
If they charge to install it, you can add to all of this will add to the value of the house, but you can't deduct it from the tax return, because there is some, like points we can deduct, there's certain ones we can't. These you can't.
did not hear the question. Improvements, yeah, Michelle, we covered that. The question is, at the closing,
What's on the settlement statement?
when you're closing on a house, name things that can add to its cost basis. So, when you're making that final deal at closing, to answer that question.
You know, it's a lot different to be able to have the answer, what they say, no, yes, 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 and have to think.
That's why we did this.
It's different to have the multiple choice than seeing it. And what did you say just a second ago? Well, fees. There's fees.
Yeah, well, there's always reporting fees.
Okay, so it's
There's abstract fees, there's legal fees, reporting fees, they have surveys that they have to do.
adding utilities.
Yeah, because sometimes there's charges for transferring taxes and stuff, that's not deductible. Sometimes you get, and then that brings up another one.
Title
Sometimes
search.
You can happen to,
Michelle's saying title search.
right, well, yeah.
That's
Well,
abstract
that's
too.
under number 7.
That's abstract too.
Yeah.
I'm sorry?
That's under number 7, that all has to do with the title.
Title
They
insurance.
do a title research and make sure that it's clean, and then they insure it.
Well, what's the difference in that and number 1?
Yeah.
Abstract fees is a title search.
But the
Title insurance is a different cat.
But you don't get, okay, I see what you're, yeah, it is too, but what I'm saying is they're related. It's because once it's clear, once the title's clear and everything, then you get title insurance on it.
That's correct, but they're not the same cat.
No, I just said they were related.
Right.
Okay.
Did Michelle get that? They were related,
Closing
not the
costs.
same.
They're related, not the same. Michelle's saying closing costs, which
It's all of this.
is all of this.
The last one, what the seller, when you get the buyer and the seller, so the amounts that the seller owes that the taxpayer agrees to pay.
As an
And that could
example,
be-
property taxes.
Yeah, property taxes, maybe an assessment that was made to put sidewalks in, or, anything that's against the property or any amounts that, like we were just saying about the termites, you know, getting if the taxpayer agrees to pay it, you know, the seller doesn't want to pay it, the taxpayer agrees to so anything like that.
But
Not
if,
deductible.
like in Georgia, you have to do termite things, so they automatically go.
Yeah.
Because you have
It's
to
not
do it.
deductible. Termites are not deductible.
But you have to do it for you to save the house.
You have to do it to pass code
Oh,
inspection.
yeah. But a lot of times the seller will absorb all those costs. But every once in a while you get, right, Chad, you get a seller that,
Sorry.
and then the buyer has to agree to pay it.
Ready?
Ready?
When selling a home, name the selling expenses.
These are stuff that we can deduct that, you know, we will say what was the expenses of selling your home. Especially when you're going to sell, you know, when you're doing, selling your main home or you're selling anything, it'll say what was your.
You said realtor?
Say what was the expenses.
Real estate fee. Commission.
Commissions on the realtor. What did you say? You said advertising fees? Bing.
I
Okay.
assume that's if you're doing it yourself.
Whatever you need,
I forgot the question.
When you're selling a home, the
Preparation
expenses
of the
that you
house.
do.
Improvements or repairs.
No, this is. How about something we said last time? You talked about a realtor. Who else would you need when you're
Attorney.
the legal?
And then of course,
Appraisal.
are they paying cash or are they gonna get what?
Loan things.
Okay. And do you know, I don't know if anybody bought a house lately, I was shocked. That they actually charge you for applications for loans?
Yes.
Oh, yeah.
You know, you have to pay $200 or $300
That's crazy.
for an application to get the loan. So it's loan charges.
You know why, don't you?
People back out.
After they've done all this work.
Said the banker in the room.
Pardon me.
Said the
Who
banker
is it?
in the room. Uh-huh. All right. This is it. Round 16. Last question. Ready?
Ready?
What transaction with a home may be treated as a sale? Dealing with a house, what can be treated as a sale of a home?
Under financing right now.
Yeah, that would be transfer due to divorce. That happens a lot. It didn't, you know, so when when you're doing the tax return, these are things that you're going to treat as a sale. What else?
Inheritance. Like you inherit.
Inheritance, so that would be
Well, it's going to be the transfer due to divorce or due to inheritance.
transferring. Divorce, inheritance, so it's been transferred. Okay.
What did we put in a lot of? The 1099?
C.
A?
A.
What's 1099A?
Yeah.
Repossession, foreclosure.
Yeah.
Well then, of course,
The 1099, well, that's 1099.
what can be treated as a sale of a home? So if something happens
But we
besides
have
the actual selling.
1099As too, and usually they get that when they do what? 1099As. They'll bring in a 1099A, and that's because they did what? They abandoned.
Abandoned.
They just walked out and said,
I'm done. Peace. I'm out. Get a
So would that be
1099A.
considered a repossession or a foreclosure? Or they just,
but when we put it
so
in a tax return, we treat it as a sale.
you treat it as a sale?
Right. And a repossession and foreclosure.
Because I know somebody who
Treated as sale,
recently
yeah.
did that.
And I want to know who in the world is doing this.
Trading
a home.
You see it all the time in ads where they'll trade a Florida home or a New York home or wants to live south and live north or
Like trading spaces or something?
or a motor home. You can have my house for a motor home. I want a house on the lake. You want a house in the city. Yeah, and you see, I don't know anybody that's
Yes,
done it, but
sir.
you see it in the paper all the time.
I'm here to
That's
visit.
crazy.
Bob, I have a question on the abandoned home, like on a 1099A. They can only claim that once they get that actual form, right? It doesn't matter if the house burnt down or whatever 3 years ago, but they have to wait. I remember one seminar, they said they have to wait till they actually get the 1099A to claim.
If it burnt down, I mean, that would be a casualty.
But wouldn't it still have to?
I think what you're referring to, there was a big thing about you get A and then you get C. C is where they resell the house. Usually you abandon it and they'll get a 1099A. And then most of the time, of course with the house market it's weird, but you'll get a 1099C. They'll bring both in. One says they abandoned it and then the other one says where the mortgage company has resold it and this is what they're still liable for. So I think that's what you were talking about. It's at one point, yeah, we were kind of like holding on to the A's until they got the C. But then the house market, it could be several years before I get, the C. So. But that, yeah.
But what do a person do if they still, I mean, I can never wrap my head around this concept. My house burned down, but I'm still in the mortgage payment.
The question is, what would a person do if their house burned down and yet they're still making mortgage payments?
That would probably happen when the house, or when they assess the damage, and it was less than what was owed on the house. And so, they'd still have to make payment on it. If they had insurance, of course, they would get reimbursed. If they didn't have insurance, they would still have to, they're still liable for that one.
So if the loan I received for the reimbursement of my house burning down, if it don't equal up to the value of the home, I'm still paying to the difference. Right.
But the 1099, because they would issue it as what you owe, not necessarily the value of the home. But did you have one of those?
No, I had a client that he never got a CR8, and his house burned down over on Molson, the hospital, and his house burned down, and he never got a CR8, and he's been paying his mortgage.
That's why it hasn't gotten a CR8, because it hasn't been abandoned, it wasn't foreclosed, or it wasn't repossessed, because he's paying payments on it. But there must have been he didn't have any fire insurance? He didn't have any insurance on it whatsoever?
He saved it.
He says he did, but...
Yeah, because then more than likely he got a settlement with the insurance company. He just didn't use that money to rebuild or whatever.
He just went and called them, homes, like, they so he'll still owe for their home.
Moving right along.
And that's just, right, banker?
Because I could never understand.
Moving right along, what?
No, I mean, is that right?
What?
If
Is what
you're
right?
liable to pay the loan, it doesn't matter what happens to the house.
That's
You're
correct.
liable to
That's
pay the
correct,
loan.
he says.
But people don't do that. They just
No.
go file bankruptcy.
Well, yeah.
We had a best friend that was out running the law and ran into a canal, and the car was totaled, and he had to pay that car off. The insurance wouldn't cover it because he was out running the law. Because
That's
he was being
right.
chased by a police car. And he paid that. That was it. So I'm assuming a house would be the same
Well,
way.
that means he didn't have any insurance on the car.
Yeah, he did. It was a brand new car. He only had it a couple of days.
Because he's illegal.
But he was being chased by a policeman.
Oh, okay.
Yeah, the insurance wouldn't cover it.
Involved in criminal activity, yeah, the
Yeah.
insurance company won't pay.
But he paid for that car. We used to kid him all the time.
Oh, we're gonna win some money. Have a chance to win some money.
It ain't gonna be money, I'm sorry.
It says
We're
money.
po for it.
All right, now how are we
Oh.
gonna do this? We
Okay, I need two
were gonna take
fast
Yeah, we
money.
need
It's
two
the
people.
turn.
Who wants to play fast money?
Who wants to play? Two people.
Linda?
No?
No.
No? Who
Linda,
wants to
Deborah
play?
wanna play that?
All right. So one of you guys is going to have to step outside and push the door completely closed so we don't hear your answers. And the smoker heads to the door. Thank you very much.
Slivers on out.
As we play Fast Money, Miss Deborah, I need to make your way next to Miss Bobby so that they can catch your answers. And actually, I'm going to have to hit the questions here. And hold on for just a second.
So you're gonna play for what?
You're going to play for...
No money!
No money!
Oh, no,
Yeah, but it's going to be a lot of fun. I hope you guys paid attention in the last seminars. We won't make it quite as long as the Steve Harvey version, but let's play.
Oh, this one, yeah, right.
No. All right, here's the first question. Name something you would say when a client is walking into your office.
Welcome to Jackson Hill.
Don't sit down.
Name something on JHNet that is commonly used by a tax preparer.
Profile.
Okay. Name something that would help someone off season in your tax return file during an audit. Something in the file that would help one of your tax returns. If it's being audited, name something. Run out of time here.
No.
Notes.
Notes. And last one, name a characteristic of an unhappy client.
Not returning. Next year.
They owe.
Complaining to court.
Okay. Very good. Ding, 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 ding. All right.
Did you write this down?
Mm-hmm. Hope everybody got those answers.
Okay, you can flip on back.
You can slither on back. That was
Are
what
they
she just
playing-
said.
Are they playing online too?
They are not. They're witnessing us playing.
Oh, we should have had online against offline.
Online
I
against
wish I knew what
offline?
they were saying. Yeah.
You know, this is my test pilot thing. Maybe we'll do that another time.
Okay, Miss Linda.
Join Miss Bobby right there in front of
Here you go.
The camera.
the camera
Oh, no.
so everybody
Oh,
can
yeah.
see.
Oh,
Miss
yeah.
Linda, we are playing for no money.
No money! Yay! Everybody's excited.
My reaction is exactly.
My reaction, exactly. Okay, ready?
Sure.
Hope you paid attention to the last two seminars. First question. Name something that you would say to a client when they're walking into your office.
Hi, welcome to Jackson Hewitt.
And give me another answer. She
Hi.
gave me that.
My name is Linda. How can I help you today?
Very good. Name something on JHNet that is commonly used by a tax preparer.
IRS.com or whatever it is.
Okay. I'm going to write that down because that's not one of mine. Name something that would help someone off season in your tax return file during an audit.
Keeping your records.
Copies of documentation. That'll work. Name a characteristic of an unhappy client. Oh, doing that. Very good. Crossing the arms. Ding, 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 ding.
What was
Okay.
your answer, my dear?
Doing this.
Oh.
Choking me.
Choking. Choking her. Okay, so Miss Deborah,
With a power
30, 40, 80 points. Okay. 10, 30, 50 points. Oh, that's okay. But we appreciate you playing the game. Yay!
Points, not dollars.
Michelle, thank you very much. Michelle, how can I help? Just so you know, the number one answer, name something you would say to a client when walking in. Hello. Very simple. Number two is, how can I help you?
I said that too.
Welcome to Jackson Hewitt. What's the third one? Very good. The next question, name something on JHNet that is commonly used by a tax preparer. Thank you, Michelle. You got the number one answer, customer lookup. The JHNet is the internet site that Jackson Hewitt's portal. So it'd be customer lookup, number one. Number two, return management. And number three, return retrieval. Name something that would help someone in your tax return file during audit. Number 1 answer, customer notes. Number 2, customer data sheet. Number 3, documentation, copies of documentation. And number 4, notes on the file. Last one, name a characteristic of an unhappy customer. Yelling or irate. Number 1 answer, leaning forward. Number 3 is crossing their arms. And number 4 is being quiet. So we all did very well.
Oh, no.
Those are the top answers.
Now, wait a minute. What about that gal from the hospital?
Which one? Okay, guys, I want to thank you so much for attending online. Appreciate you giving me this test run. This is being recorded, so we will post it. It'll probably take me a day or two to get that completely recorded. I'm sorry?
Input.
Make sure that you send some input. You can send it to me, send it to Ms. Bobby. We probably, if you did online, there will be an assessment that will be posted through BSUJH Tax in order for you to get the credit. Guess what, guys? Those of you that physically came here, you get your credit on your record for being here. But if you attended online, we will have a couple question assessment that will be sent through BSUJH Tax, kind of like a survey for you to get your credit. And we will post all the handouts and everything. So thank you so much for attending. We do appreciate it. Everybody have a good day and watch BSUJH Tax for all the latest information. Yay! I'm going to go.